Hey, hello everyone. Welcome to 30 CAGR. This is Raj. Friends, in this video, we are going to discuss about revised regulation from SEBI regarding stock options eligibility. So, especially if anybody is trading in stock options, there's going to be a big change probably in the number of stocks that they would trade or the quality or the type of stocks that they trade. So in this video, we are going to see what are the new rules that SEBI has devised, and as per those rules, which stocks would fall into the criteria of being selected and which stocks would be eliminated. But before we actually get into the details, in case if you haven't subscribed, do subscribe to this channel and hit on bell icon. We are going to discuss about a lot of algo tools, indicators, strategies, and other stuff related to stock market. All right. So as I mentioned, this has come like almost 1 or 2 months ago, and now I think it's time for exchanges to implement these changes. There are primarily four rules that SEBI has introduced to reshuffle this list of stock options. But why did they do that? They did that because there is a lot of manipulation that can happen in stock options if the liquidity levels are pretty low, and we often see these kinds of liquidity issues in stock options. And so what they have done is they have changed a few rules, and we will see what is the effect of this. Okay, whether stocks are really moving out of the list, or any stock is coming into the list, or whether the number is going to be the same. Okay, the first is pretty simple. The stock should be in the top 500 list as per the average market capitalization and daily traded value for last 6 months. Okay, remember, all these 4 points are for the last 6 months. Some are average of last 6 months, some are of 6 months, but it is for 6 months because after every 6 months they again check the eligibility of all the stocks. Again, they might remove some stocks, they might add some stocks. Okay, so all this criteria is for 6 months. Now, the first point says that let's say we have like 3,000 stocks in the exchange by market capitalization. Okay, which essentially is nothing but outstanding shares into the share price, right? So as per market capitalization and daily traded value for last like 6 months, it has to be in the top 500. Okay, which is like I would say rich stocks. Okay, top, if I can put it that way, 500 rich stocks that are there in the exchange. And second one we will park aside, it's a bit complicated. And the third one is very simple again, market weight position limit. We keep hearing about this word MWPL, market weight position limit. It's nothing but basically related to open interest, and we all know what is open interest, right? Open interest is nothing but a contract that hasn't been really squared off, right? Of course, or expired. It's called an open position. So here again they are increasing the value of this open position from 500 crores to 1500 crores. Okay, so over the last 6 months, okay, the stocks market weight position limit over the last 6 months should be at least 1500 crores from 500 crores. So what does this mean? This really means that the stock is being traded, it's liquid. Okay, if you convert it in terms of liquidity, that's really the gist of it. So that's why they are saying that the MWPL should at least be 1500 crores. Okay, this is actually very good. In fact, all these points, what they are eventually going to do is they are going to pick up only the liquid stocks, which helps stock option traders a lot because liquidities will be higher, slippages will be lesser, so entries and exits would be easy for them. So all these kinds of advantages are there, and probably manipulations would also be really difficult to happen. And then they also say that ADDV, average daily delivery value. So when you buy a stock, after obviously T plus 2, it goes into the delivery mode. Of course, these days some stocks are T plus 1 deliveries also, and in future they are, SEBI is trying to make it to even T plus 0 also. So the point here is number of stocks, okay, that have this ADDV, the average daily delivery value, okay, over the last 6 months should be 35 crore. Okay, 35 crore, and it's up from 10 crore. But remember, I think it's the average. Yeah, it's the average. So some date can be 70 crores and the other date can be zero, but they take the average of last 6 months, and the average should be 35 crore, for the last 6 months. Okay. And then the other thing is the second point that we just left out. It's called stocks median quarter sigma order size. So what this really means is, if you know a little bit of mathematics, we all know that we have one standard deviation, two standard deviation. So there are standard deviations for every stock as well. So what they're really saying is, in case if you do not know, just consider that as a boundary. If a stock is 200 rupees, let's say upper boundary is 250 and lower boundary is 150. Okay. And what they are essentially is saying is, the amount needed to move the stock's price by quarter of its deviation. Okay, if 50 is the standard deviation, for example, quarter of it, okay, which is 12.5, the amount required to move that 12.5% or the stock's price should be 75 lakhs. This figure was earlier 25 lakhs. So it's okay if you don't understand all these things, but all you have to understand is, based on these four criteria, now some stocks might go out of the bucket and some might get added. Interestingly, when SEBI mentioned about this in the press release, they mentioned that there wouldn't be too many stocks going out or coming in, but as per this IAFL alternatives research team, they kind of calculated, it's not final of course, but they said that most probably a lot of stocks actually would come into the list, which is surprising because uh, as I said, you can see the list. 25 stocks might go out and 75 stocks might come in, which is a net of 50 stocks. And I think there's another fund, Nuama Institutional Equities. Even they also said that most of the stocks, might actually get in. There's some of the favorite stocks like Zomato and I think BSC and other stocks actually might come in into this list. Guess some people's favorite stocks, are those Zomato, BSC and all, because I often hear those names from traders. So yeah, all in all, people who are trading in stock options, I think it's a good news for you for various reasons. First is the number of stocks might be increased. Second is you might have liquid stocks. Third is because of that slippages might come down, manipulations might come down if any. And so overall I think it's a good news for stock option traders. So that's all we have for this video. In case if you have any questions, you can put it in the comment section. We will try to answer if you have any questions. Otherwise, please make sure that you subscribe to this channel. And if you have or any questions regarding our algo tools, or if you want to know about algo tools, indicators or strategies also, we will drop the number in the description. You can contact us, or you can also reach out to us from the contact us page. Otherwise, thank you so much for watching and have a great day.